Welcome back to Real Vision Crypto. We're pleased today to be joined again by Rekt Capital, crypto trader and technical analyst, and also the creator of the Rekt Capital newsletter. He's recently created a course on Bitcoin investing and data science. Welcome back, Rekt.
Hey Ash, hey Real Vision, great to be back here.
It's great to have you. We should say, obviously, Rekt, there's been some recent price action in the Bitcoin space. We're recording here on Tuesday, December 7th, with an eye to what's going on. Rekt, tell us a little bit about how you see what's been happening in these markets.
Many people think it's a bear market that we're seeing on Bitcoin's price action. This recent 40% retrace or so, it is inducing a lot of panic. Many people are panic selling on this recent correction. Lots of sell side exhaustion also occurring, that final capitulation. So with each passing day, it's very likely that the bottom for this bull market correction is looming large. And it's really important to just try and understand where Bitcoin is in the market cycle. And at the moment, this does seem like a healthy retracement in an otherwise healthy growth cycle. And in terms of the market cycle for Bitcoin, it's really important to take a step back and look to as far back as August of this year. This is the macro flagging structure for Bitcoin. It's generally a multi-month accumulation range at highs. So essentially a reaccumulation range where we see a higher low and a series of lower highs. And this is essentially where Bitcoin has been consolidating. And recently, or at least rather in May 2021, we saw a downside deviation, so a fake breakdown below that flagging structure, below the higher low. And since we've actually recovered, and if we move on to the next chart, to a more updated version of this chart, we can see that this macro flagging structure is still very much intact. And I'll explain why, because we've seen a breakout from this macro flagging structure, a breakout to new all-time highs. But over the past few weeks, we've been seeing a lot of downside in Bitcoin's price action. But this downside through a technical lens is really important to just facilitating a key technical step. And that technical step is called a retest attempt because if we look at the series of lower highs dating all the way to early this year, really, of this 2021 year, these lower highs have been figuring as a point of rejection. And if we look at, for instance, the early April rejection or even the March rejection, we've always seen rejections from that black diagonal resistance. But what we're seeing now, today, on this recent retracement, we're seeing a price stability at the black diagonal, and this time it's not rejecting price action towards the downside. We're actually seeing some price strength confirmation here, price holding this black diagonal, now turning it into a new support. So from a previous point of rejection, a previous point of supply where people are selling, this same level today is now actually figuring as a source of demand, and buyers are actually buying in a previous area of sell-side pressure.
Rick, let me ask you a question. I think you were so eloquent when you were last on talking about charting more generally. I think you spoke of it as a visual record of fear and greed. Give us a little bit of a sense of how you think of the human psychology that we see on these price charts.
Exactly. It's a beautiful analogy because it truly is a graphical representation of these extreme emotions that we humans rarely feel in our day-to-day life. But whenever we're in the market, I think it's one of the few areas where we're subjected quite frequently to the high highs and the low lows that come along with that inherent Bitcoin volatility that we see in the price action. So we see extreme euphoria and FOMO, the fear of missing out, in these green candles ever since Bitcoin broke out from this macro flagging structure. There was a lot of extreme greed. There was a lot of euphoria, over optimism, confidence in Bitcoin breaking out to newer and newer highs. I remember there was a lot of talk about $100,000 Bitcoin being a very close target, even for December. And since that time, we've seen some of that extreme greed become a bit tapered off. And this is what retracements are all about. And there's no coincidence that these retracement periods are actually called corrections. Because fundamentally, what do these corrections correct for? They correct for the overextensions in our psychology. So essentially correcting the overexuberance, correcting the euphoria, the greed, to a more healthy baseline, to homeostasis essentially. And this retracement that we're seeing on Bitcoin's price action right now, we're seeing that correction in market psychology occur quite considerably, in fact. And now we're reaching to a point where sellers can't sell any longer, because if we see 3 red candles or 4 red candles in a row, sellers selling continuously, there are going to be buyers who are going to be stronger. There is a factor of sell-side exhaustion. Sell-side momentum can't go on forever, and we always see a rebound. And in fact, last week's downside wick is a very long one, and you can see that this wick, this candle last week, was met with tremendous buy-side pressure from that red box, which illustrates a demand area. So technical analysis is all about trying to understand where those points of rejection may be. For instance, the series of lower highs, this black diagonal resistance, a great depiction of points of rejection. But also, by the same token, this red boxed area here is a good depiction of rebounds for Bitcoin's price action. Whenever we look back to the past, we can see some tremendous rebounds from this red box, and it's no coincidence that we're seeing that downside wick from last week also enjoy a rebound from there as well.
So we should probably say, to make sure that we're bringing everyone along, for people who are relatively new to technical analysis, the wicks represent the range on a particular period, and the candles themselves represent the open and the close. The black lines correspond with a best fit line between a pattern for either rising and falling price.
That's right. And the only thing I'd add is the downside wick, that long, thin line. When we look back on it, it doesn't really mean much to us emotionally, but in that moment, that long downside wick is an illustration of how fearful investors were in that moment, how much capitulation during that time occurred, people really being scared about their positions, some selling at a loss, some selling at break even. But generally, a recurring psychological principle is that humans are loss averse. So during this downside wick, we become incredibly irrational. And this is where a lot of capitulation and panic selling occurs. The most extreme forms of fear take over investor consciousness. And this is where we see a lot of that loss aversion come into play. People don't want to sell at a massive loss, so they try to limit their losses. Even if this retracement was 30, 40%, people don't want to experience 50 to 60%. And a lot of the time, as we can see from this chart here, a lot of the time people tend to sell in areas of historical buy-side support, and the red area is that demand area, and lots of sell side price action and volume actually occurs during that time, which is why we tend to see high sell side volume bars in the volume. Not evident on this chart, but if we were to pull up a chart here, you could see a vast amount of sell side volume, and that is a great indication of sell side exhaustion, which tends to precede whether that's a short-term rebound or a macro price reversal for the coming weeks and months.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.